When it comes to financial matters, people have the wrong idea, and to make things worse, other so-called experts use incorrect language or use language sloppily. Then again, maybe it's not only financial products. Let's get started. Before we just get started, I thought to point this out. So, full disclosure, to call me a fan, admirer of Billie Eilish would be a huge understatement. Huge. Well before this, Apple movie and stuff like that. I've been an admirer of this person's creativity, the fact that she's at that age and creating this stuff from scratch is just crazy. She, as I said in the newsletter post, she clips off when she cuts her fingernail. More talent is excised than exists in my entire body. Anyway, one of the things that I do admire is sitting up here on your screen, and it does relate to the video, and basically all the videos that I've made here on the Much More Than Medicare channel. And you can read it there, right? I'm not going to read it out to you, but it tells me a few different things. Number one is, facts change. Miss Eilish has aged. She's not the 13-year-old. 13 when she released Ocean Eyes. She's now officially an adult. Well, when facts change, she has the right to do whatever she wants as an adult. I don't think her sex does not matter. She's now of the age. So you can see now the relationship and why it is very similar to what I'm doing here on this channel. Couple of things. Number one, just like the basic construct is just like off base, the way that the original author here has made certain, judgmental statements here is just off. So when you start off from the wrong spot, and then on top of that, facts change, you get some crazy conclusion. This happens in financial topics all the time. We'll get onto it. Let's start. So there's no question that people have started to become very aware of what I call Bidencare. Tremendous amounts of savings for health insurance premium are possible, all the way up to 100%, entirely possible. But you need to handle it correctly. And that's where we are today. So over the last 2 weeks here, a couple of very notable cases, real life cases. These are real life examples. I'm not going to use names. Don't worry about that. But I'm going to point out to you what can go wrong and why ultimately I don't think it's a great idea to get a context of the possible types of savings, but actually executing, you can send us an email. We'll guide you across the finish line. Some of you are never going to call. I get all that. But let's just go through these examples. Let's get started. So let's just call this person in Chicago, right? And so here's the situation of a family of 4 people. Okay, and what we're going to do here is I'm going to say that the person is in their 40s. Let's call it 45. And this is, like I said, no, we're going to add a spouse. Let's call this person 44, female. We're going to add dependents. So we're going to have a dependent. Let's call this person 10. And let's call the next one, 14. Bingo. And now on we go. And here we go to here. Now we're going to enter your household information. how many people in your tax household. So now we're going to have the base case, 4 people, and then we're going to have the estimated income. Now let's take the estimated income. This person, well paid, $150,000. And now what you'll see here is the result. $116 a month. Not very much, right? In other words, the amount of the tax credit is based on your location, your household size, and your taxable income. Any of those 3 move, this number here will change. Over the past days, I was alerted to the following, and it came from a professional counterpart, an attorney in this case, an attorney's office. Thank you very much. And this, I'm very sure, accountants, attorneys, you're seeing this. But anyway, let's say this was the 116 estimate. Well, that's all well and good, but the person went through here and said, okay, I qualify for $116. No one hands you $116 a month on the street. Let's proceed. Instead, what happened was this. Instead what the person did is they put in $50,000. And now you see the tremendous financial leverage, what I call financial leverage, right? The income that they reported here for the health insurance subsidy resulted in $570 a month lower health insurance premium. Hooray! That is well over $7,000, $8,000 a year without a calculator. And then you can see that means you'll see it plans as low as $1 a month. We're not going to get to the point of execution. This is the point here. My point here is you must understand this is a tax credit. This difference, this entire $698 is a tax credit that you're getting in advance. And therefore, it pushes down your health insurance premium. Because it's a tax credit, who are the parties involved? The IRS is involved. Who runs the IRS? The federal government. That means that when you're applying for this type of tax credit, you're making attestation statements which are subject to perjury. So what ends up happening, you can understand what I'm saying, is that what happens here is people misunderstand the source of what this savings actually is. And therefore now the ripple effect here is that this person has misstated their income. So a couple of things. Number one, if you're off, it's okay. 3%, 5%, 10%. Can this happen? Yeah, you can get a pay raise. You could get another job, for example, right? When this happens, you must report this because this savings here will go all the way back to January, right? So if you were entitled to less savings by $50 a month, right? You're talking about $600 tax bill that you have to pay back. Within that range, you're okay. You'll be okay, right? Don't get me wrong, it's under and over reporting. So let's say you had to take a pay cut. Let's say, for example, you become unemployed. We'll get to that, in further detail later. Meaning that if you're entitled to more because you've overestimated your income, you should go in here now and change your facts so you can get this extra savings now. The issue here is not in this particular example, let's return back to it, is, yeah, I said 5%. I didn't say 70% difference in income, right? This person has misreported by 70%, from 150 down to 50. I'm not an IRS employee. I'm not a federal government employee. But I do understand that you've sent a signed statement to the IRS that what you've told them up front is the truth. That opens up all sorts of not only financial, but legal implications for you. In this second example, a different type of issue arises. And what ends up happening is that you can be under your parents, or you can have a child above 21 still be covered here, but we need to be careful. So let's go back to Chicago here to 60615. We're going to take the same family, or we're going to take a slightly different family, actually, because the child has to be older. So now we'll call the person 55. Male, spouse, let's call 55 just for fun. We add a dependent. We'll call the one child still living at home. We're going to have another child here, however, now 24. So now we continue on, and again, how many people, and now it's a different issue. Now it's a different issue. This doesn't come from an attorney, this comes from an accountant. Right, so you can see what happens here. This number here has to be right. Meaning, the 24-year-old has a job and they're offered insurance from their small business. That person doesn't count here. She has her own job. That's number one, right? So if she files for herself, you've got an issue. This is for one household, everyone filing. This number is not 4. So let's just say it's 4, just for the moment. Let's call a household income $75,000. So now at this age, you can see it here, $1,132 a month, right? They're older. Same. Remember, the first example, they were 45. You can see it here. They're 55 now. Okay, now much bigger savings a month, much bigger tax credit a month. However, the 24-year-old's wrong is not supposed to be here. So now this is not the right. Now a number of issues. So now we've got, actually, we don't have this 24-year-old. You cannot say so. So the idea of, yes, you could be under your parents' health insurance, for example. You could have a child 24 years old under the family plan, but not if that person is filing taxes separately. You remember 1164? Now these are 3,995. So now you can see it here, which is that you need to be careful that your household and your tax sizing is correct. That you're correctly stating back to here, this household tax size is right, because ultimately APTC is a tax credit. I appear in the national media with some amount of frequency. That also has a double-edged sword. That is definitely a double-edged sword. Because on one hand, I'm trying to provide information, quotes about to inform people on the internet, and also, on the radio, for example, as well. In fact, today, May 8th, I'll be on KGO radio out of San Francisco at 7:15 p.m. Eastern Time, 4:15 p.m. San Francisco time. Anyway, this past couple of days, one of my quotes has appeared on thestreet.com. You'll know the owner as Jim Cramer. You'll also know that the person who wrote this article, Bob Powell, is probably one of a handful of the foremost nation's journalists when it comes to retirement planning and financial topics for personal finance. And so by no means is this a criticism of him. Bob and I have worked very closely together for multiple years. In fact, you can see this casual interview that we had that took over an hour up here on the YouTube channel. That said, the issue is here, this latest article says health insurance options for those too young for Medicare. So you can understand that what ends up happening is that people are, because of the way and the size and scope of Bidencare, it is so big that it can change the way that people consider retirement. That's the big picture. When you get a little bit narrower than someone at 63, maybe they can try to get health insurance. And now we've got new options, and we've got this article. And so in general, the article is fine. If you're unemployed but too young for Medicare, that's fine. If you're still working, not too awful. But then if you're eligible, here's the issue. If your former employer had 20 or more employees, you are eligible to obtain coverage from 18 months. Blah, blah. Cobra is not inexpensive, but at least you'll have... I'm going to have to shut this off. Sorry, Jim. Anyway, this is true, not entirely complete. And here's the problem with the media, right? Which is that, they're trying to make it, consumer friendly, digestible. I get all that. That said, in this case, you've cut off too much wheat here, right? You thought you were cutting off the chaff. In fact, what is left off here is the wheat. You've skinned meat off the bone. Here's the way that Cobra works. Number one, if you can access Cobra recently, and I want to call it the end of 2019, the employer is required to pay through the end of September if you are accessing Cobra as a result of involuntarily losing your job or losing hours, which disqualifies you from group health insurance. Vital, right? There's no mention of any of that in this article. And that is so big. That's almost the main point now, right? Because as a result of Bidencare, that is entirely new information. I don't know who this person is. I know the author of the article. I don't know who this person is quoted, etc., etc. I'm not sure. I wasn't there. That said, this is a pretty big omission, whether it was inadvertent or as a result of the fact the person didn't have that knowledge. I'm not there. I don't know that person. I get to plead innocent, but it also tells you how careful you need to be about the details. Just in general, kind of, sort of, doesn't work here. Doesn't. I'm still on that. I know that people are going to find me annoying and stuff like that. I understand that. I had that from my clients for multiple years. Why are we nitpicking about this little specific, terminology? This Cobra costs $900 a month, can be easily for a single person, right? The employer is required to pay for your premium. If you've lost your job or if you have a reduction in hours, which are involuntary. Involuntary, that last caveat. That also, there's another one, which is you don't get any of what I just said if you're eligible for Medicare. Okay. Here's, it gets more complicated than that actually, which you may find incredible. But here is a copy of the official document which tells you kind of where we are going, which is, this is the official COBRA document by the federal government. You can see it up here, blah, blah, blah. Model Alternative Notice of ARP Continuing Coverage, ARP being Bidencare. And down over here is, where I'm talking about. When I go down here, what you'll see here is this highlighted language here. The ARP reduces the continuation coverage premium for certain individuals. Premium assistance available who experience a qualifying event, that is a reduction in hours or involuntary termination of employment. In other words, what I just said. If you qualify for premium extension, you need not pay any of the continuation coverage premium otherwise due to the issuer. Issuer being the insurance company. There it is. There it is. Now I'm going to tell you, employers aren't up to speed. They're not. They don't know how this works. I've had multiple instances, but this is available to you. Unfortunately, because this is new, because facts change, Billie Eilish graphic, facts change, conclusions change. This article now, we're not debating the intention, but the article now has omission and a substantial one. Up on your screen is a newly released article by something called the Nationwide Retirement Institute. It's kind of a think tank from Nationwide. Nationwide is on your side. I'm not affiliated with Nationwide. The article is as stated there on your screen, which is incorporating healthcare costs into retirement planning. And what it does, it basically says, you need to think about healthcare costs, yada, yada, when you're dealing with retirement. Who's IRMA, etc., etc. I'm flipping through this for you. This I've copied for people to take a look at on GH2 Unfiltered, on a free article on GH2 Unfiltered. Here's my blog post. Here's my post on that same article, which is, and you can see here by the top. Let's just see here what's going on. Yep. Meaning, the reality is that, and you're seeing it's coming up, it's reloading now. Candid reality is, in this newsworthy. Nope. This has been my place. This has been my statement. This has been my corner for almost a decade. I've been making everything that came up on that flyer, I've said on these YouTube videos. Every single one of them. Nothing's different. Right? Go to the blog post. This has been my corner for years, almost a decade. If you want your specially tailored version of how these jigsaw puzzle pieces fit, I call it the Comprehensive Financial Planning Service. I'm not going to kid you. I am not the inexpensive provider on the block here. This is literally my best work. You want the A game, soup to nuts, every stone unturned, it sits here. Why am I telling you all this? And why the YouTube channel and the little snippets of the video is because I understand that for everyday consumers, whether or not you have not a high school degree whether you have a PhD, whether or not, you've never had to deal with commercial matters, or whether or not you've dealt with every commercial matter because you command inventory of millions of spare parts. The fact of the matter is, I am empathetic, I should say, to the idea that it's very, very difficult to tell who knows what. Everyone's going to say that. Guilty as charged. That's fine. I'm okay. I'm okay with that. That all said, go through the YouTube videos. Go through GH2 Unfiltered. Maximize Your Medicare is just the smallest example of a sliver of a number of different topics. It just so happens to be the one that would help the most people because it doesn't depend on your net worth. Right? You could be Medicaid eligible. This book candidly helps that person much more than the multimillionaire. Does. And that's the reason for choosing this topic. No one said the only topic. I'm Jay. Hope you liked today's video. Like, subscribe, hit the notification bell, leave comments, ask me questions, no problem, in the comment box, or you can send me a private email. I'll get back to you within 24 hours. Thanks for watching.